Nasdaq futures shift into lower structure control after pivot break. A structure-first breakdown of how the daily pivot failure, intraday rotation, and volume profile migration reshaped the Nasdaq futures market. Nasdaq futures entered this week inside a clearly defined two-way structure that has been in place since December. While price continued to test the upper resistance band near 26,036, the broader framework never changed. Only the market's position within it did. This desk report documents how the latest rejection at the resistance level, combined with a break of the intraday central pivot, triggered a shift in control from upper range rotation into lower structure migration, with volume and micro levels confirming the transition in real time. The map of the daily structure remains intact. The most important feature of the daily chart remains at 26,036, a level that has capped price since November 2025. Multiple attempts to hold above this band have failed, and the most recent rejection, earlier this week, once again pushed price back toward the daily central pivot at 25,405. This pivot is the boundary between upper range acceptance and lower range control. It held during the early January pullback and produced a full rotation back into the upper band, eventually retesting 26,836. That same level is now being tested again. Nothing about the daily framework has changed. Only the price's location inside it has. Holding above the pivot keeps the market in its rotational regime. Failure shifts control to the lower structure and opens the door to deeper migration. Intraday execution. The pivot failed, and structure took over. The 5-minute chart shows how this daily test translated into execution. For 3 consecutive sessions, price defended the intraday central pivot at 25,727, keeping the market balanced inside upper range rotation. That level finally gave way during the New York Open, aligning with the rising daily support line. This was not panic selling. It was structure-led migration. When the central pivot fails, the framework dictates a move to the opposite boundary, and that is exactly what occurred. Volume profile. Value did not rotate, it migrated. The volume profile confirms the nature of this move. Across the past 4 sessions, price ripped through multiple prior points of control, the gray POC lines that mark where the most contracts previously changed hands. In a balanced market, price returns to those zones. In a migrating market, prices move through them. That is what happened here. Once the intraday pivot failed, price stopped rotating between overlapping value areas and began relocating value lower. Multiple POCs were left behind, thin volume zones were crossed quickly, and no new value formed above the lower structure band. This tells us the move was not a temporary pullback, it was a reauction of where trade is taking place. What will Asia and London be trading? With intraday structure now aligned to the lower range, the next sessions will be guided by these bands. Upper-lower structure zone. Micro 3 to Micro 5, between 25,595 and 25,671. Lower structure floor, around 25,462. Holding above Micro 3 keeps the price rotating inside the lower range. Failure there increases the probability of another test of the floor and potentially the daily central pivot at 25,405. This is where the next phase will be decided. Macro structure perspective. The market did not sell off. It migrated. The resistance, failure, pivot break, micro-level rotation, and volume profile shift all tell the same story. Value has moved from the upper band toward the lower half of the daily structure. The map never changed. Price simply moved to the other side. Stay connected to the macro-structured desk. Follow how these levels continue to evolve through Asia, London, and New York. You're welcome to subscribe and follow the Macro Structure Trading Desk. Updates are published as price interacts with structure, allowing you to track how each phase unfolds in real time. These desk updates document a structure-first process, observing how price accepts or rejects predefined levels over time. Coverage spans from futures, commodities, forex, bonds, crypto, stocks, and indices. with structure providing context before direction. This observation is for informational purposes only, and does not constitute financial advice.